morning everybody, it's Christian from Serene Education with the 4 Majors Analysis Update for the 25th of October 2011. Hi guys. Okay, let's have a look at the Euro against US dollar on our 4 Majors this morning. Let's start with the daily. What's been happening? Well, yesterday, very tentative to start with. Eventually during the US session we saw price breaking that 13,900, but for the first part of the day we saw price testing it and falling back and then finding support through the US session and then punching higher. What it's done now is it's physically taken the price above 13,900, which happens to be a price support and resistance you can quite clearly see here, but also further back. And now what we'd like to see is a genuine bounce on there, finding support and then a continuation higher. All the news coming out of Euro at the moment now that they're trying to put together this massive fund for Euro, bailout for Greece, etc., and pretty much putting together some funding, or getting the banks to put together some funding so that they can oversee future problems. Seems to be working. That news is kind of taking price higher, if anything. So this slight consolidation over here, pretty much making a nice support area, and then we've seen the continuation, a nice beautiful candle up, bullish candle, now punching higher with a bit of gut. So very indecisive, well, a decisive range, but still more of a decision upside. But once we get above here, then ultimately we should still looking for further extensions higher. Intraday charts would show us the CTC pretty much hesitant at first. If you look at the 4 hour, for example, at 13,900, quite clearly there, and now we're seeing a breakout through the latter part of yesterday's trading. Nice little shooting star pullback. And then going through the Asian session, we've seen a slight hesitation. However, the 4 hour candle that's actually been forged now is sitting above that 13,900. Okay. The great thing about it, we need a nice juicy bullish hammer of some sort. Hammering at a bottom at a prior resistance now becomes a new support, and then we should see further extensions to the upside. You can see quite clearly beautiful swings to the upside here, swing high, and we are at that crossroads. If you look at the 30-minute chart, quite clearly 13,900 above me, I put in green, and we have an uptrend here, and you can see a price bouncing on that, and at the moment now testing the Asian high that we've seen just recently. Ideally like to see a good trading above that here at the 39.20 mark, 13,900. Trade above that would definitely see clean edge at least to the highs that we saw yesterday at the 13,9600 mark to start with. CTC on this time frame is negative, however, but as long as we keep trading above the 13,900, then ultimately what we could see is a blue candle followed by a blue bar, etc., giving us indications for further top side. 50-minute the same. You can see hesitation, still blue, very indecisive here. However, the CTC on the other side is still red, and we have seen the pullback. So just put in your support and resistance lines. We know psychologically there is a very strong support and resistance line previously at 13,900, and if price continues to trade above that area, then there's more likelihood for further upside movement. Remember, the institution moving average is all important, and we are trading above it, so we still remain bullish. We're just seeing consolidation against the major upside trend. Moving on to the sterling as US dollar. Let's look at the daily time frame. We've seen a lot of movement to the upside for this pair, really gaining strength as price action has continued over the past month or so. Definitely forming higher swings, which is all important. CTC has gone blue for the first time on this time frame. We see on the daily clearly the blue, and most importantly, for the first time, I think we've seen price trading against the 1600. We'd like to see price trading above that now. If price can find support above that area, then brilliant, because psychologically, guys, this happens to be a very strong support and resistance level in the past. A lot of hesitation, or a lot of support through the earlier part of this year, through the mid part of this year, and now you can see since price has broken through the early part of September and the bounce on the October to the upside, we are now testing an underside of a prior strong support and resistance. Are we going to see consolidation at this point before we see a continuation higher? We do need to see price trading above that to be still considered this overall as a potential bullish signal to the upside. Failure to do so would only mean that we're looking at a bullish consolidation in a negative trend. because we've had a breakout. We're trading at the underside of that breakout. It's got to be trading above it to cancel that negativity. And then we have the institution moving average way above at 1500. So we have to be trading above 1600 for all the big money to be thinking of this as potentially still long. As things gather momentum in euro in terms of a bailout or some strong stringent measures for eurozone, then you're going to probably see the sterling gain strength as what's happened with the euro. Let's have a look intraday. Let's have it see. Okay, so we know that psychologically 1600 is a very strong support and resistance level, and you can clearly see on our hourly chart, for example, how price has spent the last part of, well, most of late US session and most of the Asian session just testing at 1600. So as long as it keeps to that upper range, then we could ultimately see price reattempting 1600 quite soon. So if you wanted to see if things, if we saw price fell and fall back, then 1590-200 has been a price support and resistance level, which takes us back to the 50 period moving average. You can see the 20 period moving average acting as a little support area as we've seen this little breakout here, a little consolidation. You can see quite clearly that we've had a hesitation and then a lot of support through here as it's been trying to chip away at the 1600 mark. Now for the first time it's trading at the underside, and we're seeing more price action at the bottom of the candle. This candle has yet still to close. So yes, that can change, all this can change, but as long it's clearly testing the underside now of the 1590, what's that, the 1598.50 mark, failure to fund reattempt, then we could see a slight pullback, and then we could see a reattempt quite soon of that 1600. But if anything, if that fails to materialize, then ultimately we look at 1590-200 as a potential target, because we've been there before. That's all we're looking at. CTC at the moment still remains bullish. It still remains upside. You can see the CTC very much upside favorable, and if we continue to see price trading in this upper range, then we could see the 1600 being attempted quite soon. So 4 hour, quite clearly see all the moving average below, hesitation at 1600, which is going to occur primarily because psychologically anybody who'd been getting into this trade way back here when we saw the bounce back in early October would potentially have looked at 1600 as an ultimate goal. So as things stand, higher swings, 1592, you can see quite clearly there happens to be a slight bounce, consolidation 1592. If we fail to see any reattempts quite soon, then we could see that as a potential pullback area. If price fails to break the 1600, then ultimately we could look at 1590-400 as a potential first target to the downside. This will be support 1, support 2 here at 15,900, and support 3 down at 15,8500 for the foreseeable future. This is a 50-minute chart. Notice this, we are trading above the 200 period moving average, and so still in a very much an upside move. So if we fail here, then we're obviously going to see some pullbacks against the major trend, which will occur, and then we're going to try and see if we can muster some more strength to get above the 1600. It has to break above 1600, otherwise we're going to see consolidation with an outlook to still see consolidation to the downside. US dollar Swiss franc daily also moving slightly lower as prices continued. 8900 having to be price support and resistance has been breached. Yesterday's trading range smaller but still closing lower than the previous day, still signifying further downside movement. It's very tentative downside move. Heading back towards previous support and resistance, which will take us back to the institution moving average and the 50 period moving average. So a bit of a squeeze happening here. Lower swings dictating prices moving slightly lower. For the first time we have 3 parts of the 4-part CTC strategy in our favor. We have the red, and 1 part at the top. We need 4 altogether to confirm that, and I don't think we'll see the 4 until we see a breach of the institution moving average here at the 8700 mark at least. So as it stands now, pretty much making its way tentatively to the downside, as per sterling and euro moving tentatively to the upside as it hits those very strong support and resistance levels. You can see price has pretty much come full circle on this pair. We've had a breach recently, a lot of hesitation as we tested this uptrend from the start of this upside move before we saw the US government pegging their currency, and then we saw this massive upside move, and then we've seen a correction since, and we were looking for a potential bounce higher. That failed to materialize after 2 days of indecision, followed by bearish engulfing, then engulfed the whole lot at the break of this trend line, and sure enough we've seen price falling lower. So as it stands now, we should be looking for tentative moves to at least the 8700, 8750 mark. 4 hour has clearly taken us below the institution moving average, which is a bearish indicator. You can see quite clearly price support and resistance here at 8900 being breached. We are seeing very hesitant moves to the downside, a lot of indecision creeping in. Price is very, very small. So if anything, you want to see a price trading lower, then ultimately 88.80 on the 4 hour would have to be breached the downside, and then we look at our potential targets going forward. Lower swings dictating price action is moving slightly lower and a lot quicker just recently. All the moving averages crossed over. We have them in order. We have to see the closer one at 20, 50, and 200 in a bearish, and it would have to be 20, 50, and 200 that way. So everything's stacked in our favor. However, we are seeing clear support at the 8800 mark, and to see any further extensions lower, we have to see a break and close lower than that area to confirm further moving to the downside, with potentially overall for the foreseeable future something around 86.50 at the moment as a potential target to the downside. If not, we could see bounce and the 8900 being reattempted soon. Why? Because we've been there before. That was the price support before we saw the breakout, so keep that in mind. Last pair of the day is the US dollar Japanese yen. Let's have a look. Price action moving lower, and one thing to note, 7600 being reattempted yesterday, and as of Asian market European session open, we are still looking bearish sentiment wise, still trading at the low end of the wick as we're heading lower. Daily 7610 would have to be breached. We've been there before, so very, very important to see that being traded below. You can see here a lot of wicks on the underside. Price really trying to hold its ground above the 76 mark as we've headed lower. Sentiment wise, lower swing. The past 4 hours has been lower than the previous one, so forming a lower swing which happened to be lower than the previous swing here we saw in the early parts of the 24th, and you can see price action pretty much dictating downside. So very, very important as things go. 76, a lot of wicks, so buying momentum trying to stay above 76. A lot of momentum really trying to edge out some sort of support. The reason being, we are trading at an all-time low. The US dollar is trading an all-time low against Japanese yen. We don't want to be trading any lower. It's just by breaking below 7600, we'll be making new lows, and it's just crazy. So you can see price really, really trying to put the brakes on for further downside movement. By a lot of these candles finding more buying emphasis coming to it, even though we are still dragging lower. More buying trying to come through. Are we going to see a bounce because of that? It'll be interesting to see. You can plot a relative strength index on a 4 hour to see clearly if there is any sentiment confirming that there's more buying power coming through. If you look at it here, yeah, not really, to be honest with you. We have seen price heading, well, yeah, I mean, price has been edging lower than the previous low, but we're still seeing price flat at the bottom, primarily because we're trading at 30. Slightly higher than the previous one, which, yeah, it could be construed as potential support being coming into it. You can see the next attempt that we're seeing now, the 4 hour that's in play now, however, is a lot higher than the previous one, and pretty much prices at the same trading. So yeah, you could probably see RSI pretty much climbing through. If anything, we'd like to see the RSI really breaking through the 50% mark. In this case, would definitely take it above the previous swing, and by doing so, will definitely give us an indication we should be seeing further upside movement occurring at 7600. So if anything, got to see a break and close lower than 7600, especially on a 30 or an hourly chart, to give us indication that we're still looking long, or see a nice bounce or bullish engulfing here would definitely confirm that we should be looking for upside movement, and look at your potential targets to the upside for that. That's it, guys. Hope you have a fantastic trading day today. Please, if you are using the CTC strategy template, please follow it up with sound money management rules.
As I mentioned, and I'll keep mentioning, no trading template out there is its weight in gold if you don't back it up with sound management. Money management, very, very important. Keep your trading simple. Look for the market to give you a clear indication or signal for direction, and then we act on it. We don't want to be speculating. I know Forex is speculation to a degree, but we don't. We want to try and use our indicator templates to give us the best probability factor. And as I keep mentioning, the more eggs in our basket, the more probability that we're going to see price doing exactly that we wanted to do. So try and keep those eggs piling into your basket, and the more and more confirmation you get, then the more likely it is that you're going to see that. And then once you get all those confirmation, then act on it. But back it up with sound money management. So look at potential target areas. Are you risking far too much than your potential target? If that's the case, then you bide your time and look for a re-entry with a better stop or entry. So take all into consideration. Most importantly, enjoy yourself and keep it simple. Till then, trade serenely.